What's up, everyone? It's Scotty with MoneyVest. So Lululemon here on a very nice momentum higher, up a little bit over 10% on the day, breaking out to a 2-year high at well over $400 per share. And in this video, we're going to break down exactly what happened, what is the catalyst, and also break down the fundamental analysis on the company. It's funny because we actually ended up doing a full stock report on Lululemon this past week. So I actually posted an updated analysis on Lululemon and basically shared the entire report with all of our members in the MoneyVest community. So as always, if you enjoy this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. That's all I'm asking in return. And link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, members only private videos. Everything is going to be included. And this right here is surprisingly the report that I shared today before the market opened. So MoneyVest stock report, as you guys can see, Lululemon, ticker symbol LULU, and this is the first one that you can access. Again, link's going to be down below. We did a full detailed analysis. I mean, these are very long 6-7 page reports that you can access through our MoneyVest community, and there is a 16% annual discount that's available till the end of this month right now, available as well. So Lululemon shares hit higher 2-year highs on the S&P 500 inclusion. That's right, S&P 500 is now going to include Lululemon. And is up a little bit over 10%, trading just under $416. We all know how big of a deal that is for companies because once it's included in the S&P 500, a lot of institutional investors, ETFs, fund managers, mutual fund managers, they need to buy the stock in order to kind of the ones that are actually tracking the S&P 500, so they need to adjust those weightings appropriately, and as a result, that creates a lot of buying sort of pressure on the stock, and it ends up rallying. So they are going to be replacing Activision Blizzard, which is going to be acquired by Microsoft for $69 billion. That's quite the number right there. And instead of Activision Blizzard, Lululemon is going to take its spot. And as we know that for every company to be included in the S&P 500, it needs to be profitable, it needs to be in the US, and it needs to have certain consistency with respect to the profitability, the cash flows, and certain market cap thresholds in order for it to be included. I'm actually surprised that Lululemon was not a part of the S&P 500 up until now. So the inclusion of a company in the S&P usually causes demand for its shares to jump as mutual fund managers and other institutional investors tracking the index begin adding the stock to their portfolios. And Lululemon's shares rose as high as $416 on Monday, and their highest level since December 2021. And the stock is now up nearly 30% year to date, with the market cap now sitting at well over $52 billion. And in September, Lululemon also agreed to a deal with Peloton to basically offer all the athletic apparel for the US fitness bike manufacturer. And in return, Peloton's going to be making a lot of exclusive digital fitness content for the apparel maker, developing all content for a Lululemon studio beginning in early 2024. So this right here is the entire report that we have done on the company. You are more than welcome to check that out. And, you know, if you are investing your hard-earned money in these companies, I think it's important for people to just take 5 minutes, 10 minutes to read through these entire reports so that you get a very good understanding on what the company actually does. So they have 670 stores globally with over 34,000 people employed. And the stores are located in various countries, including the US, Canada, Australia, United Kingdom, South Korea, and Germany as well. There's several over here in Dubai as well. And they were founded in Vancouver in Canada. Now, their business strategy enters the positioning their Lululemon Athletica and Eviva Athletica as well, branded items as tools for an active and enjoyable lifestyle. And they basically create, distribute, and retail sportswear, including footwear and accessories. Their products cater to activities like yoga, running, and training, aiming to enhance people's lives. So this is going to be some of the products. So apparel for both men and women, primarily for women, as we already know. Lululemon is very popular among women. We've got shoes, we got accessories, and we've got online in-store shopping services, Lululemon Studio, which is again going to begin in 2024. That's exactly what Peloton is partnering with. And we got memberships, we got ready for pickup within 2 hours, shopping appointments. There's a lot of different things that Lululemon basically offers. Now, when it comes to the revenue breakdown, direct to consumer and company operated stores are the primary ways that Lululemon sells its products, and $8.11 billion was the revenue in 2022, with majority of the revenue coming from direct to consumer, which is approximately 46%, and the company operated stores contribute 45% of the revenue, and followed by others contributing to about 9% of the company's revenue, and majority of it is coming from the US, approximately 70%, and the remaining from Canada, 14%, China at 8%, and rest of the world at 8% as well. Now, going over to the fundamentals in terms of the quantitative analysis, as you can see, just absolutely phenomenal growth in revenue of almost 20%. That's a huge check mark, consistently growing revenues. And it's actually quite incredible how well and how consistent the numbers are for Lululemon. So if you come over to the income statement on an annual basis, every single year they've been able to grow revenues, profits, margins. Now, margins is actually another story because operating margins have declined by 3.3%. So from 24.6%, they've come down to 21.2%. Gross margins are slightly higher. So 55% gross margins, that's really good. So that's going to be a check mark, but operating margins are not significantly, I should say, just moderately lower than compared to 2014. EBITDA here, 24% margins at just over 2 billion. So even though EBITDA has grown, but as a percentage of revenue, so EBITDA margins have declined by 2.8%. Net income's also up over 13%, but net margins are down a little bit over 7%. And operating cash flow margins down 5.57%, so that's also going to be a bit of an issue. And we got operating cash flows up almost 15%, and CapEx as a percentage of revenue is a little bit under 8%, which I guess is okay. It's only up 1% from 9 years ago. And free cash flow is also up to $228 million. However, on a trailing 12-month basis, they're back up to over $800 million in free cash flow. So margins have declined, but last 12 months, their margins are once again back in the 7 to 8% range. Earnings per share up 14% because not only net income has gone up, but their shares outstanding have also gone down by about 1.5%. So that's a huge check mark. Balance sheet's also pretty good. We're looking at current ratio, quick ratio at over 1. Debt to free cash flow is a little bit over 4, so that's going to be an unchecked because we look for this number under 3. Net debt to EBITDA is also sitting at under 3 actually, so we're looking good there. Total assets do exceed total liabilities. That's a check mark. Cash to debt's over 1, so that's good. Total assets over total liabilities over 2. That's also good. And solvency ratio is over 46%. That's great. And shareholder equity has also gone up. Now, they are sitting on a net debt according to different sort of Seeking Alpha and Trading View. So if you come over here, it does suggest that the company actually does have debt of about $1.19 billion. But these numbers are as of 2023, and this is going to be quarterly as of second quarter 2023. So for that reason, I think it is, so you can see that we are taking into account this number right here. So this is actually going to be 2022 over here. It's going to be 2013, right? So 2013 over here. So that's the number that we are taking into account. And as a result, they do have negative $85 million in net debt as of 2022. But again, if you take a look at the most recent numbers, the second quarter 23, they do have about over $1.19 billion worth of debt, which basically means net debt of a little bit over $86 million. Now, when it comes to valuation, unfortunately, Lululemon has become less efficient in the way they have done the business because, as you can see, the return on assets, equity, and invested capital has come down from mid-20s to now 15%. 27% return on equity is pretty good, but return on invested capital has also come down to just over 20%. Employees have increased significantly over that time period. And then we've got revenue per employee and net income per employee basically flat from 9 years ago. So the profitability metrics in terms of efficiency is more or less the same. Now, valuation is expensive. Valuation is really, really high. This is a company trading at 27 times enterprise value to EBITDA, 64 times earnings, 6 times, almost 7 times sales, and 56 times cash flow. So if you come over to statistics over here, you'll notice on a more quarterly basis and the current valuation, 30 times cash flow, 48 times earnings multiple, and we've got 13.5 times book value and about 21.5 times enterprise value to EBITDA. So those are very, very expensive numbers here for Lululemon. So if you come over to our intrinsic value spreadsheet, what I have done here is taken a 14% growth rate with a 20 times PE multiple, 6% growth rate in free cash flow because the last several years has been just under 6%, although I think I'm not doing super justice for this because if you do 800, we're looking at almost 20%. So if I go with a little bit of a higher free cash flow multiple, a growth rate here of about 10%, and we go with a free cash flow multiple of closer to 20, then we are looking at, one other thing that I want to point out is that I actually didn't even take into account the free cash flow in our analysis. So this is going to be published in our stock report. So what I've done here is I've not even taken into account the free cash flow over here because of the fact that trailing 12 months much higher than where we closed in 2022. So this right here, again, is going to be 2022. And this is also going to be 2023 over here, 2028, and 2032 is what we're looking at. So that's where we are, and you can see the weighted average is a little bit over 100% for EPS, so free cash flow is going to be 0%. Discount rates 12%, margin of safety is 10%, share dilution -2% because the company's been buying back shares, and we get down to a fair value of $264. And of course, after this spike, we're looking at $415 for Lululemon. That means another 36% potential downside needed in order for this stock to be trading at its intrinsic value. And that 264 level kind of falls right at this green rectangle. So this right here, 264, 265, is exactly going to be inside this green rectangle. And that's in line with where we were back in July. And since then, obviously, the price has rallied over 60%. So that's really where we are. I mean, this is a phenomenal company. I really do like Lululemon. I've been, covering this stock for 2 years, 2.5 years. And it's a phenomenal business, very, very strong brand value. The demand is there, and I think the business is also very ambitious in doubling down on their revenues and earnings and whatnot. But of course, it's an expensive stock, right? It is a great company, but at the same time, it is an expensive stock at the moment. So next resistance is going to be $481. So this right here is going to be that level to watch with a support sitting right over here for Lululemon. So since we are breaking out above this level, we'll go ahead and turn this level into a support for Lululemon. So this is going to be that new support, resistance all the way up to $481 per share for this company. So that's where we are. Huge inclusion in the S&P. Let me know your thoughts down in the comment section below, and what do you think about Lululemon. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, and don't forget, we do have the links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all these research reports. There's going to be literally super detailed analysis on these companies, so you can access that through our Discord and our Patreon. As always, if you enjoyed this, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is down below. 16% annual discount that's available till the end of this month. And as always, happy investing. I'll see you all in the next video.